Now for our call of the day, Morgan Stanley out with a bullish call on Ford, upgrading the auto stock to overweight, noting its pullback offers an attractive entry point. The firm also cuts its price target from GM. Big price target cut there from 42 down to 30. We're also reiterating it to equal weight rating. It's harder to say than you might think. It's our call of the day. Kevin, you own both Ford and GM.
Yes, Ford first. It is a supply chain story. There's no demand problem. Everybody wants a 150. They can't get one. And so the question, as a shareholder, you sit here at the $12 range, is if they could wave a magic wand and tell you they've solved their supply chain problems, the stock would be 20 bucks. That's what I think. That's why I own it. I think the management there is pretty good. And I think they're going to try everything they can to solve supply chain, which is everybody's problem, but Ford's particularly. Now, GE is a play on electric vehicles.
GM.
Sorry, GM, exactly. And I look at it and say, look, there's going to be somebody behind Tesla here. They spent a lot of money on developing these products. Nobody gives them any credit for it. So GM is a place to play alternatively at a much lower PE and hopefully a lot less volatility. I don't agree with this call if it's a sell call. I think you own these together if you're going to be exposed to automotive. And I really like what they're doing in EV because they've got some great engineers. I teach graduating cohorts of engineers in electrical engineering. They are hiring a ton of those kids, so they're doing something right.
All right, so you're a big believer in their bright drop or just their general ability to convert all vehicles from internal combustion to electric?
I think it's going to take a lot longer than people think, but the fact is they're pouring a lot of CapEx, a lot of intellectual capital into it. They're going to be, over time, one of the big players in EV at an affordable price. These guys are going to bring cars in the mid-range price. That's your thesis on why you own General Motors. Now, if you don't think that's going to work and you think the only company that's going to have electric vehicles is Tesla, you don't do this, but I don't agree with that.
Well, to this point, all right, GM just announced their quarterly results at the beginning of this week, and they had record-breaking sales of the Bolt EV. And this is as the Lyriq is about to come on board, and the Hummer EV and a bunch of other platforms. So part of what Adam Jonas's call is that he thinks that the Ford pre-announcement a couple of weeks ago transfers over to GM. If you look at those quarterly sales figures, I just don't see that. But the bigger disagreement I have is where he takes the value of Cruise, which is their autonomous vehicle business, and kind of says it's worthless, kind of says it's a money pit. First off, I totally disagree, but to the point that the stock is down 4.5% right now, look, no fundamental investor like me or Kevin woke up this morning and said, oh yeah, I think the Cruise division stinks and I'm going to sell GM for that. That's just not how fundamental investors think. So what you've got going on right now with the stock price is algorithms. They're trading off of this headline report. Hey, the target price is cut at Morgan Stanley from 42 to 30. Do not fall for that, all right? If you are a fundamental investor or if you're a trader, this is a great time to step into it. This is just noise, what's happening today. The future is very bright for General Motors.
Yeah, just as an aside, you mentioned the Lyriq. That's the Cadillac EV. It's a beautiful vehicle. Joe, over to you. Glad to have you back.
Yeah, I'm glad to be back. So for either Kevin or Jim, because I've owned GM in the past, I've owned Ford in the past, and obviously Adam's note raised awareness for me to take a look at both of those. But how do they address what Adam talks about with the China business for GM? And he basically says that's where he's overtly pessimistic.
I think you have to be pessimistic about China right now because we're basically in a trade war and economic war, and we're starting to cut them off from chips and everything else. But it doesn't change the fundamental demand for these cars and these vehicles and these trucks in Europe and in North America. China's going to get worked out. You've been hearing that from everybody from Starbucks down to Tesla. It's going to get worked out over time. The premise that this company is not going to participate in the explosive growth of EVs is ludicrous.